Options are powerful financial contracts that can give you an edge trading stocks and limiting your risk. So today we're going to explore how you can make money and manage your risk trading stock options. Hey everybody, welcome back. So today I'm going to be talking about some beginner stock options trading, and these are just ideas that I think have worked well for me, and ideas that I definitely will be continuing to use, just with stock options. So the first thing you want to do whenever you trade stock options is you want to make sure you know what companies you believe are bullish, neutral, or bearish. Okay, so bullish meaning that you believe the stock is going to go up, and neutral, of course, meaning that you don't think the stock is going to move very much, and then bearish meaning that you believe the stock is going to move downwards. Okay, so, and whenever we talk about options, personally, in my opinion, I think it's much easier to guess if a stock or company is going to go up, just because you can take a look at some of the fundamentals of the companies. You can take a look at some news. You can take a look at stock screeners, what analysts are saying. You can take a look at insider activity. There's just so many factors that you can consider whenever you are more bullish about a stock. Okay, it's not to say that there aren't ways to identify companies that are more bearish. There's a reason why a lot of people, especially Wall Street, is shorting companies because they believe that the stock is going to go down. But just for the sake of those who are just starting out, or those who may not have a lot of experience with trading options, personally, I believe that trading bullish stocks are just simpler than bearish stocks. Okay, so again, it's not to deter you from trading both, but so in this case, for today, I'm going to share with you some ways that I take a look at all the different options I can trade, uh, given a company that I've been researching. And so today I'm going to use stock ticker GM, so General Motors. Okay, so this is actually a stock that I am more bullish on. I believe they're gonna they've been getting into the whole electronic vehicle EV industry, and I believe they're gonna be just a pretty important factor in the whole EV movement. Okay, so first I'm going to show you what I've done. Okay, so whenever I'm more bullish about a stock, I tend to, of course, purchase I will purchase a number of stocks in the company. So I have some GM stocks. But what's interesting about options is there are times when the stock or the market moves downwards, and it could be due to a variety of reasons. I believe this week and even last week has been going down because of the rise of inflation. There's been a lot of talk and concern about inflation. Of course, the Fed doesn't want to increase interest rates yet. So they've talked about how they're probably going to increase interest rates in 2023, but unfortunately, because of inflation, the market and investors are concerned that there's just no way to get out of not increasing interest rates earlier. So this past week has just been a really down market, a really just red market for the most part. It's not like big swings, but it's been consistently going down. So rather than buying more stocks, I thought it'd be a sort of interesting play to do options in this case, especially because especially whenever you believe that there could be a jump back into the original price, or maybe not the original price, but just after a pullback, I believe there's going to be some kind of recovery. Okay, so as you can see, today the stock was down 1.81%. And so what I like to do is I like to go to a tool called Optionstrat.com. Okay, so Optionstrat has a lot of great features. One of the features is it gives you ideas on different options you can trade. Okay, so for this particular stock for GM, I selected bullish for the stock, and then I gave a price, an option expiry date of August 20th. Okay, so meaning that I believe that this stock will move up before August 20th. And, for me, it's simply because, I know there's going to be earnings reports coming out pretty soon. Okay, so once you plug in your symbol, and if you're bearish, neutral, bullish, and you plug in your expiration date, it'll give you some options. Okay, and it'll even tell you the chance of the risk factor, the chance of you profiting, and the percentage return on risk. Okay, so you have these are, and again, these are all, for the most part, these for this particular trade, they give you more simple options, but at times you'll see more complex options, especially if you're more neutral or bearish about the company. Okay, but in this case, the options are relatively simple. You can do a long call, so meaning that you're betting on the fact that you simply buy a call option, and you're betting that it's going to go up, and you profit if the stock goes up. There's a covered call, which requires you to either own the underlying stock or go with a leap option. Okay, leaps options are a little more complex, but I can talk about that in another video. So leap option would allow you to buy an option in the stock as if you own the stock, and then sell a covered call on it. Okay, there's also an idea where you can simply sell a put, so meaning that you're willing to purchase the stock at a given price of, in this case, $52.50. Remember, every option is 100 stocks, so the your return would be the premium that you earn on selling that put. Okay, so in this case, it's $78. Personally, I do like selling puts at times, but you have to keep in mind that the collateral that you put up is quite high, because you have to be ready to purchase 100 stocks at $52.50. So that is over $5,000 you have to have as collateral in case you're assigned the stock. Okay, one that I really like, and it's a little more risky, is the bull call spread. Okay, so meaning that you're bullish about a stock, and where you buy a call, but you also sell a call at a higher strike price. Okay, so this is kind of interesting because, I haven't really used a lot of bull put spreads before, and it gives you another option where you can buy a 55 put and sell a put at a lower strike price. Okay, so that's another way you can play the stock, and it gives you just the chance of making a profit, and it's actually higher, much higher, 10% higher than the bull call spread. Okay, so that's something that I actually don't use a lot, and something that I would definitely consider using down the road. Okay, so going back into our, in this case, I'm using Robinhood just because I like Robinhood's platform and short-term trade options. Okay, so you would go into your option trading, and then you would plug in whatever uh, whatever the option strat had mentioned. So in this case, I'm going to try the bull put spread, and let's say it asks to, okay, so it says, we're going to buy the 55 put and sell the 57.5 put. Okay, so we're going to a Robinhood account, set the expiration date to August 20th. We're going to buy a put at 55, and then we're going to sell a put at 57.5. Wait, let me check. Okay, it doesn't have 57.5, but that's okay. We can do 50. Oh, here it is. Okay. Okay, so over here you'll see that your break-even point will be at $56.35. If it goes up to $57.50, you make a profit. And if it goes down under 56.35, then you start losing some money. Okay, so the total credit you would get is $115. Okay, so that's just a way that you can play options that I think is really great, especially if you're bullish on a company long term, but you see just opportunities to buy the dip. So instead of just buying stocks outright, I think that's a little more risky in my opinion. I mean, even though the upside is definitely more, just because if the stock goes up, then you would just make so much more. But in this case, it's a more conservative option that I think a lot of people can use, especially if you're more bullish on the stock. And so it's just a strategy I'm doing myself. And yeah, if you like this content, if you want me to make some more, leave a comment below, like and subscribe. I would really appreciate that. And until next time, I'll see you guys later.